Welcome back to the Financial Independence Network channel. Today, we'll be giving an update on the Federal Reserve and what to expect in the future regarding interest rates and inflation. Make sure you hit that like button if you want to see more content like this in the future. Also, comment on any other finance-related topics you'd like to see. The current state of inflation and interest rates is a wild roller coaster of confusion and uncertainty. On one hand, markets predict that inflation will keep on falling like a plummeting stock, but on the other hand, savings rates just can't seem to keep up with the prices we pay. This leads us to the big question of just how much higher the Federal Reserve needs to raise those rates, and whether the economy and stock market can keep up the pace. But there's one thing that's clear as day. For those who want a decent return on their savings, the higher interest rates are a ray of sunshine in an otherwise cloudy forecast. This is because interest rates have risen like a rocket taking off to outer space, while inflation has started to cool its jets and decrease. So, for those who want to park their money for a while without taking any risk and keep up with inflation, the interest rate landscape has improved like an ugly duckling into a beautiful swan. Jerome H. Powell, the fearless leader of the Federal Reserve, has discussed positive real rates with the intention of tightening the financial conditions in the Fed's fight against inflation. He also stated that the central bank is likely to raise the federal funds rate a bit more and hold it at a relatively high level until disinflation has taken hold and runaway inflation has been defeated. But this may not be music to the stock market's ears. As interest rates continue to rise, borrowing money becomes more expensive and difficult, like trying to buy a house in the Hollywood Hills. This, in turn, increases the risk of a recession. There's also the matter of whether interest rates are truly higher than inflation, which is what positive real rates would seem to suggest. The answer is not so clear, since market interest rates have certainly increased from near zero, but measuring inflation scientifically is as difficult as getting a teenager to do their homework. For most consumers, the cost of living is still raising too quickly and feels like it's getting out of hand. While positive real rates have arrived, there's a catch, like the small print on a contract. What matters to most consumers is what they must pay for goods and services, and the cost of living is still rising too quickly for comfort. As a result, most short-term fixed-income investments can't keep up with inflation. In conclusion, the current state of inflation and interest rates is a complex issue with no clear answers. It's like trying to solve a Rubik's Cube with one hand tied behind your back. One thing to note is that although the urge to park your money for a while without taking any risk may be enticing, it may not be good news for the stock market or the economy. That concludes our video. If you enjoyed this information, please comment, like, and share. Also, make sure to subscribe and hit that notification bell so you don't miss our Friday series on the steps to achieving financial independence. Thanks for watching.